All right, everyone. I found a good one for today, I think. It's Charter Communications, CHTR. I saw this randomly scrolling around on X, so that's probably maybe the first bad signs that I found it on X. But it caught my attention, so I figured we'd look at it. So we'll do three things. We will look at the current valuation, the latest earnings, and then kind of some other things to consider. Whether that's insider buys or shares outstanding, short interest, um, forecasting for the year, bullish catalysts, things like that. So let's see what this is. It's a broadband connectivity company, cable operator, serving more than 57 million homes. Wow, so big company. 41 states on a spectrum band. Internet, broadband products and services. Okay, so very big company. Let's look at their earnings that came out today. And this is in millions. So this right here is 13 billion in revenue, which is a slight decrease, from last year. And then you can see, operating costs about the same, depreciation about the same. Other operating expenses went down quite a bit. Almost enough to offset the decrease in revenue just from this other operating expenses. So that's interesting. That makes the income from operations, it's about the same. I mean, I know this is in millions, so this is a big difference, but it's a minor decrease. So then we'll see, interest expense, is a lot. Look at that. They must have a lot of debt. We'll have to look at the balance sheet after this. Then other expenses, and so this is about 1.3 billion. Income for taxes, then there's taxes, then there's net income. So still making money. $9.30 per share. So, I mean, looks good to me. Besides, I want to see what this is, this interest expense. What is their debt? Cash and cash equivalents, accounts receivable, whatever. I just want to see they, have about $500 million in cash. And then they got a lot of property, plant, and equipment, as you would expect. And then here is their accounts payable, and this is the number I was looking for, this long-term debt. Look at that. That's a lot. That is a lot of debt. And that's why people are bearish on this company, I would believe. That has to be it. Because that right there, when compared to their net income, it's going to take them a long time to pay off that debt. So that's something to watch for. Okay. So let's just do a kind of, let's look at the financials here. You can see basically flat revenue growth. It's really not changing that much. And the cost of goods sold, same thing, really not changing that much. Gross profit flat. Operating expenses pretty much flat. Their income, cool. It's actually the net profit is here. So they're making about 5 billion. Every year. So that's good, but then this balance sheet is what's kind of making me hesitate, because look at this. And their debt is pretty much staying the same, if not growing a little bit. Because $95 billion in debt, that's a lot. talk about interest rates. Watch the interest rates of this company. Because that's the story of this stock, is this debt, in my opinion. Let's just look at this cash flow real quick. If there's anything here. No, I'm not seeing anything super interesting there. I do want to see how many shares outstanding they have. 141 million. That's not bad. I was wondering because their earnings per share was like $9 per share. And the shares outstanding is quite a bit. Sorry, the shares outstanding is not a lot. I think below like 100 million, 50 million is amazing, but I've seen companies with shares outstanding in the billions, so this isn't bad. And then you got a market cap of 25 billion, which makes an interesting story on this, because if you have a market cap of 25 billion and you're making 5 billion every year, that's why this PE ratio is so low. But man, it took a 25% dive today. By the way, people that are like equating this to a similar stock to Adobe, which is what I saw on Twitter, this is not the same company as Adobe because of the debt alone. Different story. So not even the same comparison. So X, bunch of stuff you can't really count on there, so just be aware of that. But yeah, so the PE ratio is really low because the market cap's 25 billion. But then, when you got a company that has $95 billion in debt, that's kind of tricky. That's so tricky for me because it's like it seems like it's a good company, but that debt. Why is CHTR down so much after earnings today? Okay. Core business is shrinking. 120K broadband subs. Worse than next week, worse than last year. Lost video customers again. Okay. Losing its moat. Free cash flow decline. CapEx is rising. Wasn't just a bad quarter. Multiple quarters of subscriber losses. Okay, so this is a trend. Which that's tricky because in a stock like this, until it's just going to keep going down until they turn this around. It doesn't matter. This is like your value trap. It doesn't matter if they have a PE ratio of 6. If this stuff keeps happening, then they'll just keep going down forever. They will never stop going down. So subscriber losses, earnings per share miss. I wouldn't read too much into that. I guess they did weaker guidance. Let's see this. Are insiders buying the stock? Not really. Okay. I want to ask it. What is there? I mean, I think there's concern with the debt. The debt was asked what ChatGPT thinks. Is there any concern over their debt? Yeah, that's what I thought. A bit nuanced, not immediate crisis. Yeah, look at this. That's one of the highest debt loads in the entire S&P 500. Whew. Leverage is elevated by peers. Very leverage model. Credit ratings BB. Okay. Dang. Short interest on the stock. This is on Fintel too, but holy cow, look at that. 27% of the float is shorted. Holy cow. I mean, maybe short squeeze if they find some sort of positive news, but dang, that's tricky. I was looking at this and I was excited. I was like, yo, look at this value here, but um because I saw this PE ratio and I was like, dang. But that debt, and if what they're saying is they're losing the subscribers, and it's a slow path downwards, it didn't look too apparent in here. It looked like things were pretty much flat. And so maybe that's not that big of a deal, but, um, man, that's tough. Interesting stock though. Let me know, what I'm missing or what I'm, uh, or maybe other things that if you are holding this, what you like about it, if you're shorting it, why you're shorting it, those sorts of things. Um, I think this is a very interesting setup. Just crazy that it has one of the most debt. It's one of the most debt laden stocks in the S&P 500. Its debt is 95 billion. This low P ratio is maybe a value trap. So yeah, let me know what you want on this. I think this is very interesting. So, I will see you guys in the next one.